Good afternoon, good evening, everyone. Thank you for joining our event today. We are super excited to have you. My name is Nick Williams. I'm a board member at ACLT, and we are thrilled to present along with NIPAY an event today on embedded payments. So embedded payments is a fascinating topic, and we can tell from the registrations that there's a lot of interest in this topic. And I think one of the things that makes it so interesting is it can mean so many different things. And today, my brainstorm definition for what embedded payments is the timely and unobtrusive offering of financial services that solve customer problems. So I think that it's been a while since we just used card on file as a substitute for what we're talking about today. And I think that there's a lot of critical mass that's come together in the form of regulatory okay, in the form of infrastructure in place, and in the form of progression towards recognition of how important our personal data is to making embedded payments at a critical mass right now. So we brought together this panel, NIPAY and PayCLT, with the idea to bring together different perspectives in the embedded payments world. And we have a bank, because this is the US. The bank, the backbone of the financial services that are offered are almost always going to have a bank that's just underlying the risk, underlying the main offerings in some way, shape, or form. So we're thrilled to have MVB Bank today. There's also got to be some way to get in touch with these services. And so there's got to be some plumbing, some infrastructure in place. And there's a lot of offerings out there, but in our opinion, Lithic is one of the strongest, one of the most interesting new entrants into this kind of infrastructure space. And then finally, at the heart of all embedded payments is the information about you. And having access to that information is what is going to make or break your embedded payments experience. And so Akoya is a leader in providing permissioned personal data. So incredibly excited for this topic, incredibly excited for these panelists. I'm gonna let Ron Mazurski from NIPAY speak a little bit about the NIPAY side, and then after that, we'll get going. Ron, over to you.
Thanks, Nick. I want to say that NIPAY is really happy to partner with PayCLT. This is the second joint event that we've done together based upon research that we do with our members at the beginning of the year, both sets of, or both organizations. And I want to make sure that everybody understands that a lot of work and effort has gone into pulling this together. And this is one of those major hot topics that we're talking about this year. We'll be doing the research again later this year, beginning of next year, to work out our plans for topics at that point. We're really excited about this event. You'll find a great panel of experts that we've put together that Nick has reviewed with you. We have our moderator today that I'd like to introduce, who is Alex Johnson of FinTech Takes. I've known Alex for many years, and he is really a stellar industry analyst. And I've known him in a couple of different roles over time. And I'd encourage you guys to read his publication, FinTech Takes. He is an expert in the FinTech arena. I want to just let everybody know, once we turn this over to Alex, I'd ask everyone to make sure your video is off, that you're on mute, so that there's no noise coming in and movement coming in on the screen. And Last thing is, after this is over, this 1 hour session is over, we're going to have a 30-minute networking session that we traditionally do, where the panelists will join with the audience and be able to be in groups of 5 or 6 people and get to talk with each other. So truly a networking opportunity. At this point, I just want to turn it over to Alex and ask Alex to do his introductions and discussion. Thank you.
Awesome. Well, thanks, Ron. And thanks everyone for taking the time this evening or this afternoon to be here with us. As Ron mentioned, if you could put yourself on mute, that'd be great. I expect we may get 1 or 2 more chimes for people coming in. We'll just pretend for the purposes of this meeting that if there's a Zoom chime, that just means that somewhere out there an embedded finance startup has just raised a new seed round. So that'll be what that means for the purposes of our meeting today. As Ron mentioned, I write a, oh, there we go, there's one. I write a newsletter called FinTech Takes that analyzes the FinTech industry. Embedded finance and embedded payments is one of those topics that I'm particularly fascinated by and write about a lot. And so I'm very excited to be moderating this panel. We will have the opportunity to ask questions. So at any time, if you have a question or a comment that you'd like to chime in with, please just go ahead and enter that into the chat. We'll try to address those as they come up, but we'll also save some time at the end for answering any additional questions. And then as Ron mentioned, we will have some networking time after that where you can catch all of us in the individual breakout sessions, and we can definitely answer more questions then as well. So with that, I'd like to start by doing a slightly more in-depth intro for each of our panelists. And because they know themselves much better than I know them, I'm just going to have them introduce themselves. And we will start with Matt. Matt, would you mind?
Sure. Thanks, Alex, and thanks to PayCLT and NiPay for putting this together. So Matt West, the Chief Strategy Officer for MVB. I started up MVB's FinTech business about 5 years ago, previously responsible for its operation and technology teams as well. And prior to that, worked as a management strategy consultant for about 10 years and an odd route to financial services. My background is engineering, so traditional manufacturing plant, building gas turbines, wind turbines, and working with industrial sort of man-made diamonds. So a different route to get here, but happy that I made it to where we are. And just a little bit more on MVB's FinTech business. We sponsor and support multiple segments of FinTech, crypto clients, Crypto.com, NYDIG, Kraken, or a few. On the payment side, Bilgo, Fiserv, and FIS, or WorldPay. And Neobank, we support Credit Karma Money program, as well as a great neobank program called Mana that's launching. It's focused on video gamers. And then we also, within our FinTech business, we support a good portion of the daily fantasy sports and online sports betting. From a banking perspective, their payments and banking needs and the regulatory framework are pretty similar to many other wallet providers. So thank you again for having me here.
Awesome. Thank you, Matt. And if we have extra time at the end, or if someone catches him in the networking session, ask him about his non-financial services background and work experience, because that sounds fascinating. Next, let's do Anil. Anil, would you mind introducing yourself?
Yeah, sure. So my name is Anil Mahalaha. I'm a chief evangelist at Akoya. I've been in the financial services industry for about 35 years now. I'm a founding employee at Akoya. I'm also a founding member of Financial Data Exchange, which is the standard body in the United States and Canada for financial data exchange. Akoya is actually an API-based financial data access network that provides permission data access to the fintechs who need financial data to power their product and service. So that's what Akoya does, and Akoya is a 100% OAuth connection-based network with the financial institutions, and that is, and we'll get into that quite a bit in terms of what's going on right now. But the data to Akoya is reliable, is accurate, and is secure, and is permissioned. So that's what Akoya does.
Awesome. Thank you, Anil. And then last, but certainly not least, Preeti.
Hi, I'm Preeti. I lead the product team at Lithic. A little bit about Lithic. We do card issuing and processing. So we enable a lot of these, we're going to be talking about embedded finance, a lot of these new embedded finance players to issue prepaid debit and credit cards as part of their products. So that's really the heart of what we do. Before this, I was at Plaid. Before that, I was at Coinbase. So I've kind of looked at this from a couple of different angles.
Awesome. Well, we're definitely going to get into that. So I have a question specifically earmarked for you that hopefully should trigger a lot of good conversation on that front. Just to level set before we then get into the details, I just wanted to talk a little bit about embedded finance and embedded payments specifically. And I'm going to draw from a report that Bain Capital recently released on embedded finance. That's an area that they're particularly passionate about. And the report, which we can share a link to in the chat, basically outlined that the current sort of market size of embedded finance within the US is about $22 billion in revenue annually, which is obviously very sizable. Now, when you compare that to the overarching size of the entire financial services industry, it's still very, very small. And so what we're going to be talking about, largely speaking, is the delta between the two. And from Bain's perspective, they see that over the next 5 years, that number, $22 billion in revenue, is going to more than double to 51 billion in revenue by 2026. And, interestingly, when you look at the composition of embedded finance and what are all the different types of embedded finance that you can offer, payments is obviously one. And payments, I think, is a good one for us to anchor on for this session because it is by far the most dominant form of embedded finance in the market today. Bain shared in the report that roughly 60% of all embedded finance transactions today are payment transactions. And within that sort of overarching ecosystem, consumer payments is dominant in particular. And so again, 2021, according to Bain's report, $12 billion in revenue was generated through consumer embedded payments. By 2026, they see that jumping all the way up to $21 billion in revenue. And then most interestingly to me personally, and we will talk about this, I know there was a question from Aubrey about B2C versus B2B. We're going to talk about both because on the B2B side, according to Bain's research, it's really just a sliver of the current embedded finance market. In fact, the vast majority of B2B payments still happen via ACH or even check. About 40% of B2B payments still happen via check, which is kind of wild. And so looking at the market, only $1.9 billion in revenue is currently generated by B2B embedded payments in 2021. But by 2026, that's projected to jump all the way up to 6.7 billion in revenue. So we're just at the very beginnings of starting to see that start to spin up. And between B2B and B2C, the expectation is that embedded payments will make up a very large portion of the overall sort of embedded finance landscape moving forward. So with that sort of context to start us off with, one thing I'd like to do to start is to circle back to something Nick mentioned at the beginning. How do we define embedded payments? And Preeti, I'd love for you to start and just share sort of your definition of how you think about embedded payments, and then we'll ask Matt and Anil to do that as well.
Yeah, when I think about embedded payments and a lot of what our customers are building, it's really that they're building an experience to serve some customer need and then embedding a financial functionality within that. So that's really how I would define it. It's really financial services that were traditionally offered only in a bank branch or portal or website are now being offered in a, you would argue more contextually aware, but maybe we'll get into that, more contextually aware place like an Airbnb account or a Uber account or right at the point of checkout. So it's really bringing those financial services into a new context. That's kind of how I think about embedded finance.
Awesome. No, that makes a ton of sense. Anil, how would you sort of build on or add to that?
Yeah, I think I would say along the same lines, embedded payment is a frictionless and seamless experience where financial and digital payment processing are integrated seamlessly into the e-commerce shopping journey. So that's what I would say. And also, the consumer does not have to leave the app and go to a third-party payment provider or banking services to complete the payment. It's done right there. So that's how I would define embedded payments.
Awesome. And Matt, what's your perspective?
Yeah, I think both covered a good portion of it. So I start with embedded finance being a non-bank that's offering a financial services product. From there, I think different types of products that could be offered. There are loans, deposits, and payments type products. So for us, the payments piece, anytime money is moved, is part of the embedded payments. I think both Anil and Pretty covered sort of the reasons why embedded payments are gaining traction, either contextually aware or making it a smoother process. But so as a subset of the embedded finance.
Yep, absolutely. One of the things that Nick mentioned in his opening that kind of just sort of flashed in my mind as he was talking was card on file, right? And I think it's a good reminder that embedded finance and embedded payments specifically is not a new idea, right? It's been around for a long time. The idea of moving financial services to kind of closer, as Preeti said, to the context of what the consumer is trying to achieve. I think for the vast majority of financial services use cases, honestly, that makes a lot of sense, both to consumers and to businesses. What I want to talk about is what's changed recently. And again, the Bain report gives a little bit of the history on all of this, but I think one of the biggest sort of differences between embedded finance and embedded payments now versus those concepts 10, 15, even 20 years ago was the amount of infrastructure that we've built to sort of enable embedded payments and embedded finance. I'm just curious for everyone's perspective on, like, how do you think the advances that we've made from an infrastructure standpoint have sort of changed the opportunity around embedded payments? And Preeti, I think this question contractually has to go to you first.
Yeah, I was going to say card on file, and now we're talking about infrastructure innovation. So I think, Alex, to your question of how has it changed? I think the infrastructure has made two things happen. One, it's just a lot easier to get started, right? I think that this is a lot, this takes me to Lithics brand promise really around, okay, we have this API, you're building some product, you can just incorporate card issuing, right? That's the kind of name of the game for a lot of the modern card issuers. Very different than where we were 10, 20 years ago, where you want to issue cards. This is a 24-month project. Those issuers are only going to talk to you if you have a level of volume and level of sophistication. So I think the sort of barriers to entry for, I'm talking about cards, but I'm sure, I'm sure the same applies to other embedded finance products. Barrier to entry has gone down a lot. And then the other piece is the functionality has become a lot more flexible. So for example, people want to do innovative things around how consumers build credit, how they earn rewards, how they have, kind of this concept of a disposable or one-time use card. And none of those things were native in card issuing platforms 20 years ago. So I think I think that's sort of the kind of compounding effect of it's more flexible. You can make more innovative products on this infrastructure, and then it's much easier to get started.
Yeah, no, I think those are both really, really good points. And it's funny, right? I mean, I think from an infrastructure standpoint, whatever layer of the infrastructure you're working on, you have a slightly different perspective on like what this big unlock is that's happening. On that front, Anil, I'd love to get your perspective on like even going a level below the payment method when we're talking about data and sharing data. Like, how do you think about that sort of infrastructure unlock and what it enables?
Yeah, I think in my mind, the infrastructure that has really changed is the advent of APIs and API gateway, and so those are the major factors, from an infrastructure point of view. Mm-hmm. And embedded payment systems operate via APIs. that embed them as an upstream payment processing tool within a different app or a website. So, and this also allows, merchants, especially small and medium-sized merchants who are not banks or financial institutions, to oversee the entire payment processing from beginning to end. So that, some of it, that Preeti was talking about, right? The processes have changed, and the API and API gateway has taken us there.
Yeah, no, absolutely. I mean, the API, it's funny. I mean, I'm just old enough to remember when like that was sort of a term that not everyone understood or wasn't like in the like lexicon of everyone working in the space. And today it's like, if you haven't taken what you do and boiled it all the way down into a simple, easy to connect with API, you're not part of today's fintech stack, right? So it is very much of a definitional characteristic. Matt, I guess one thing I'm curious for your perspective on when you were talking about the different companies that work with you, it's an interesting mix, right? Of like neobanks and then kind of more traditional sort of payment service providers. Having been in the space for a while and having enabled, both some of those more legacy providers as well as sort of newer entrants into the market, how do you see this sort of infrastructure changing the way that companies are engaging with embedded payments?
Yeah, the two things that I picked up from Preeti was the barrier to entry for companies is much, much lower. I think the APIs clearly play a significant role there. And then the flexibility of products that can be offered. So in many cases that may involve if you want to call it a newer infrastructure player that's just building something on top of the legacy systems. And then in other cases, we're starting to see some infrastructure, at least in the early stages of being replaced, but I think that's still very, very early. And the one thing that we haven't talked about, which I think also has not caught up yet, is the infrastructure for risk management. While it's easier to create and launch a payment product, the back end piece of that, both for the fintech or payments company as well as for the bank, there's still a good bit of catching up to do with risk management tools and that infrastructure.
We're going to get there. We're going to get to that one because I definitely want to talk about that. I mean, I feel like sometimes with embedded finance, we sort of lure ourselves into the trap of thinking that like we're all done and now it's just time to collect a bunch of volume. And in fact, there's a lot of those sort of risks and problems on the back end that still need to be smoothed out. Before we get there, though, I did want to ask about sort of value and use cases. And there have been a couple questions from the audience that we kind of think work into this discussion around, what's the economic case for a business to embed financial services or payments? And I think that ties very nicely into something I wanted to ask about, which is, what are some of the really interesting or compelling use cases that you all have seen around embedded payments that kind of get you excited about the space or sort of paint a picture for you of like where the market is going? So maybe we can kind of flip the order around. Matt, I'd love to get your perspective first on like when you're talking to businesses about embedded payments, how do you talk about the business case? How do you help them sort of think through that? And then among all the different businesses that you're talking to, like, are there any particular use cases or ideas that kind of get you really excited?
Yeah, I mean, we look a good bit at what value is our customer creating for their customer, because I think that speaks to what the long-term value of the relationship could be. And just a couple of examples from ours. I think Credit Karma, and we support their Credit Karma Money program, which is their checking and savings product. And it does a couple of things for them. One, it helps create more engagement for their existing Credit Karma users. Since they've been acquired by Intuit, they've done a great job of putting together their TurboTax, sort of consumer refund programs, and how they think of the overlap, the cross utilization of a checking or a debit card program or a savings program, and what they can do there. So they're creating new value for the existing customer base that they have. On the B2B side, we work with a company called Repay that supports, I generalize it and call it accounts payable automation. It's probably not the most accurate term, but they embed with a number of small operating systems or ERP type systems in specialized industries, whether it be car dealerships or hospitality, and they're helping to facilitate bill payment. So you mentioned the 40% of B2B payments that are still checks. They're doing a great job converting that to virtual card and or ACH or wire. So I think both of those, they're creating value for their customer beyond just saying, hey, here's some new technology, here's a new way to do something. It's really about the value that they can create by embedding a financial product into the flow of their customer's current sort of life cycle or journey.
Yeah, no, that makes a ton of sense. And the very sort of vertical specific embedded finance and embedded payments is one of the things personally that gets me really excited and kind of fired up about the space. Anil, what are your thoughts? How do you sort of talk to people or help people conceptualize the value of embedded payments and embedded finance? And then any particular use cases jump out to you as being really exciting?
Yeah, before I do that, I think I wanted to say that I think the embedded payments was moving along, cruising along, and then along came the pandemic and the hockey stick curve right there after that. And so the use cases that really excite me are what you see, let's say embedded finance or embedded payments in a grocery store or Whole Foods has it now. I can use my Chase card that is part of Amazon to pay my Whole Food grocery, or even professional services. You go to the dentist, you go to your healthcare provider, and you can check out there, and it's all embedded. Or insurance is a good one where the policy, if you're making a claim, you get paid, and your deductible is taken right out in the experience that you're in. Or digital wallets obviously is a good example of embedded payments, where Google Pay, you can use your wallet. All I do is carry my watch around, and that's embedded payments, for me. Another good one I think is Google Maps, right? Where I'm looking for parking, I find the parking spot, and I just use Google Maps to pay for parking. So those are really, that's just taking off in terms of use cases for embedded payments.
Yeah, no, and it goes back to what you were saying about sort of removing friction for the user, right? Like the paying for parking is one of those ones that I think we all sort of assumed like this is just going to be our lives forever. And then the first time you pay with parking without ever having to do anything, you're just like,
Right.
my entire life has changed. So no, I mean, I think it's a great example. Preeti, what would you say on this question?
Yeah, I mean, I think I really liked Matt's. I really liked Matt's answer around what's the value. What's the value for those of us in the B2B space? What's the value to the end customer, right? Whether that's a business or a user, and then it can be in many different forms. So I think what we've really seen, Alex, I'm also bullish on the verticalized solutions. Yep. Because the opportunity in my mind is if you can create a really strong product across a bunch of adjacent needs for a single customer base, that's a pretty compelling proposition. So, I'm thinking of Parker, one of our customers that does a lot of different things for e-commerce businesses that are somewhat specific in the way that they operate their own businesses, that might not be well served by a bank or another provider that's trying to serve all kinds of different businesses. And so by going after that segment of the market, they're able to offer, yes, embedded payments, but many other services. You can think of, these folks need to do payroll or vendor management, things that may not have anything to do with payments. I think that to me is a really interesting way to provide value. Again, going back to Matt's point, to that end user of the product.
Yeah, no, that's a great point. And I think it's really interesting when you think about the sort of breadth of problems that you're trying to solve for that end customer, right? Because to your point, I mean, I think one very, very broad hypothesis for how to think about the evolution of embedded finance is that SaaS-based products have sort of unbundled all of the ways that companies and people used to do stuff, right? So now we all have, I mean, streaming is a popular example. We all have these different streaming services that unbundled cable, but like businesses have the same thing, right? That I think the average small business has 10 employees, but 20 different SaaS products that they use, right, to manage their business. So like we've unbundled all of this stuff. And I feel like, to your point, one of the value propositions of embedded finance is hey, let's bundle a few things together, right? Like maybe let's restart the bundling journey and get back to a bundle, but it may be a more verticalized or sort of focused bundle that really addresses that problem. And I think financial services is such a good initial thing to add to almost any bundle, because everything we're doing either as consumers or business owners or employees revolves to some degree around money, right? And so it's always this easy thing to sort of add on. We're told by Jesse in the comments that parking in Google Maps is being depreciated by the end of the year, which really brings me down very low. That's depressing to hear, although given the rate at which Google kills things, I guess that's not terribly surprising, but okay, we'll chalk that up as a loss in this particular conversation. Another thing, and Randy actually added in a comment as well that I want to address about sort of understanding and kind of measuring the value of embedded payments and embedded finance. And I think it's a really interesting, somewhat academic, but interesting question. And just to reference the Bain report that I was citing before, they actually do draw a distinction between the amount of commerce that's enabled through embedded payments or embedded finance and the revenue generated from those activities. And I think in that report, they have a pretty specific definition for how they delineate between the two, but it's a very good point. Preeti, one other thing I wanted to ask you about that you referenced in your initial introduction about your background is when we talk about embedded payments, I think a lot of times we do this in lending in other areas too, but payments is maybe the best example. We tend to sort of generalize payments as like one thing, but it's actually not. It's a whole bunch of different mechanisms that get bundled into that consumer payments number or that B2B payments number. So when you think about embedded payments, and this could be either for B2B or B2C, what have you, are there particular types of payments, cards, ACH, wire, even crypto? I know you have sort of a background in that space that jump out to you as being particularly relevant for different areas within embedded payments, because it wouldn't seem like all payment mechanisms are sort of built equally, so to speak.
Yeah, I mean, I think that's a great question in the sense that there are different payment methods that'll get the job done best depending on what you want. And, I'm not, for all my love of technology, I'm not convinced that the most complicated solution is the best one.
What?
The card on file is pretty damn good.
Yeah.
I think that's that sort of gets at what you want to accomplish. And I think, for example, I think ACH and especially some of the advancements in same-day ACH and where that's going in the next 5 years, things will become much more instant and irreversible, like it's similar to what's happened in Europe. That could make that a great payment rail for large value purchases. Recurring purchases can often be good for that. But where ACH really falls down is lots of small purchases, fraud risk, and the whole sort of disputes management is kind of pretty tough to navigate there. I often talk about card payments being particularly good for how ubiquitous they are. Almost everybody is willing, especially kind of post-pandemic, willing to accept card. And one of the big limitations was either you're online and doing virtual cards, in which you could get that payment instrument up and running really quickly, or you're doing physical cards at point of sale, in which case it's going to take you a while to get that thing printed and shipped. You have all the constraints of the real world on you. Now, what makes me particularly excited about cards as a payment method is you can add them to the digital wallet, Apple Pay or Google Pay, and get going right away. And I think that's really bridged the card as a vehicle for sending funds, right? So I could send, Matt or Alex, I could send you a card that you can then add to your digital wallet and go buy coffee. And we can do a coffee chat that way, right? Without having, I wouldn't use, for example, ACH for that. And I might not use crypto for that, right? So, with crypto, just to round out our 3 big payment types here, with crypto, I think it's really about, can it be particularly good for in-app native types of like sort of token transfers where you want to do a lot of things within a confined universe, but you don't necessarily need to talk to outside systems. One of the big friction points I think that still remains there is on-ramp, off-ramp from crypto to fiat. And then store of value, but that's a separate story altogether.
Yeah, no, it's interesting. I mean, one sort of dumb but maybe useful way to think about crypto is that like payments are embedded by default within the ecosystem in a weird way, right? And in a way that I think we have a hard time in sort of TradFi world, like wrapping our heads around that like money and payments is more just inherent to the ecosystem as opposed to sort of an add-on product or an enabler. That's great. And Neil, would love to get your perspective on that same question. I mean, I think one thing Preeti pointed out that is interesting to me, at least, is that we're turning like payments into software, right? And that's something actually that's talked a lot about in the Bain report as well. But it's like we're reducing these sort of cumbersome mechanisms for transferring value into these smaller, more sort of nimble software units. And cards is obviously one example, but I think like ACH and just like access to consumers' bank accounts and sort of the programmatic way that we're enabling that is another way that we're doing that. What's your perspective on like different types of payments that fit within sort of the embedded payments universe?
Yeah, I think the ones you listed, I would say all of the above, right? Including crypto. Obviously, credit card, debit card, digital wallets. I think Preeti talked about that. Same day ACH, I think, is pretty big where once you authenticate, and especially if you're using Akoya, you authenticate once and Akoya gives the payment information to the merchant, and then you can use that for ACH. Same day ACH. So same day ACH is now, I think, cleared 3 times a day, 1, 5, and 8:30 in the morning, 1 and 5. So if I make an ACH transaction 9:30 in the morning, I can see the payment at 1 o'clock show up. So I think same day ACH has gone a long way, will go a long way for payments. And I think also payment as a service, right? So now if I have a Venmo account, right, and I have money in the wallet and I want to get a service done, like I recently, I couldn't, my lock was jammed, so I called a locksmith and he came and he opened the lock and he actually ended up replacing the lock, but I didn't have to talk to any bank to make the payment. I had money sitting in my Venmo account. I just paid it from there. So I think these payment as a service provider, digital wallet, cards, same day ACH, crypto, all of the above is really the forms of payment that are now being used in the embedded payment space.
Well, and you bring up a really interesting point, which is something I hadn't spent a lot of time thinking about, but like another part of this that's interesting is the slow sort of fusing of embedded payments and embedded banking in the sense, and this has been borne out in consumer research that I've seen recently. As a consumer, you can just keep little pots of money in lots of different places, right? Like I was just looking at my Apple Card and I have Apple Cash sitting in my Apple Cash account. And it's kind of a pain, honestly, to get out of my Apple Cash account. And the reason for that is by design. Apple wants me using that money to transact within the Apple ecosystem. But I think it's a really good point that like, embedded payments is one thing, but sort of persistent funds availability and embedded payments as a part of that functionality opens up even more interesting use cases. So I think that's a really good point. Matt, I want to get your perspective on this from a bank perspective. And I always keep kind of coming back as we're talking about this in my head to that number around the number of checks that are still used. And like the fact that even though there are some of these really exciting use cases, we have crypto, we have virtual use one-time cards, a lot of this is still like stuck on checks. Like, what's your perspective on that mix and how it's going to change over time?
Yeah, so most of MBB's work, we're supporting the businesses and their view. We're focused on this framework of when they're looking at different payment methods, we're helping them through what are their goals? Is it ease of use? Is it speed? Is it cost? Is it risk? What are or it could be on the revenue side, it may give them additional lift in terms of bringing new customers or converting more customers. So I think the different payment methods, if you think of this matrix where you have the different reasons or different factors of how you could evaluate a payment method, and then you have ACH, check, or wire, or card, And I think, and crypto, and two that we're watching are how FedNow and real-time payments, or RTP, how those will be adopted by banks. The settlement and the operational processing for it fits in pretty well with the current banking system. If you look at in Europe and some of their real-time, not necessarily RTP as that particular product, but the instant payments. I think once there are additional ways to execute those, it could unlock a next wave of solutions. Today, if you want an instant payment, it's typically card, or someone is taking the risk of that payment. In the case of ACH, you'll see some sort of guaranteed ACH products that are out there. What would that mean? Just someone else is taking the risk, whether it be fraud or operational risk of that executing and settling. So I'm curious to see how some of the more instant payments options develop over the next few years.
I'm glad you mentioned instant payments, actually, because that's something that's come up in the chat a little bit as well. I mean, I think instant payments is one of those things that can kind of shake up the snow globe a bit as it relates to the adoption of and use of embedded payments across a whole bunch of different use cases. And I think, and we'll circle around to sort of some of the risks around embedded payments, because I think that potentially accelerates some of those risks as well. But Anil, Preeti, any additional thoughts on top of what Matt said about sort of real-time payments making their way into embedded payments?
No, I think you covered it pretty well.
Awesome. Okay. Well, let's talk about challenges then. That's something that I think, again, probably doesn't get as much discussion relative to some of the other topics within embedded finance. I mean, I'll pick on Bain a little bit here. Like from a VC perspective, it's all TAM, size of market, big opportunity. Like this is all great. It's all very like sort of forward looking and positive. But I think the risks associated and the challenges with embedded payments are also very real. And there are some that just really haven't been solved or haven't been kind of fully addressed yet. So maybe starting with Matt, and then we'll work through, what are some of the biggest challenges and sort of risks you see with embedded payments?
I can tell you that the challenges with embedded payments get talked about quite a bit at MBB, and I'd say within other banking circles. So there's plenty of conversation. Maybe it's just the friends that we have.
Well, you don't publish your conversations. That's the problem. The VCs put out reports. You guys are just working quietly.
Yeah, and the reports are very helpful. And I'll focus more on the risk side of it. So when we think of risk, there's regulatory risk, which is just that we get in trouble, a bank would get in trouble with its regulator. There's financial crime, by making things easier and faster, that typically makes crime easier and faster as well. Crime could be fraud, could be money laundering. So those are some of the challenges that we solve for. There's quite a bit in public around P2P, and I think Zelle is a good portion of it. The fraud and how that's being handled, sort of balancing consumer protection with speed and ease. That's a challenge that isn't fully solved yet. So I think the technology components are much farther along again than the risk components of it. So those are the challenges that we spend most of our time talking about and trying to help solve.
Awesome. Yeah, no, I think those are all really good ones. And yeah, I mean, it's interesting how from an embedded finance perspective, just generally, and I think even like buy now, pay later is an example of this, you see changes in the way that financial services are presented to consumers or to businesses. And it kind of goes back to what Preeti was saying, like it's a new context, right? And in a new context, that's both useful in that it can be more convenient, it can be more seamless for the customer, but the context is also important in terms of safety, right? I think that we're all trained as consumers to sort of act in a certain way when we're in a certain context. So when we're conducting financial services transactions, there's sort of a way we've been trained to behave. When you embed those financial services transactions in new places, you're changing the context in which consumers and businesses are interacting. So I think that's a challenge that maybe doesn't get talked about enough.
Yeah, I'll add a little bit more. I mean, if you think we'll give regulators the benefit of the doubt that regulation is introduced to protect something. It may be protecting a system overall or protecting an individual consumer. And sometimes in order to protect, the information needs clarified. And at the same time, putting a speed bump in there, that creates friction. Putting an extra disclosure in there, that creates friction. So there's some natural tension between many of the embedded payments solutions that are being put out there with consumer protection or system protection. So I think that will, I imagine, will continue to be a challenge. I think as we get more clarity, more consistency, it'll continue to evolve over time. But I think if we have this same conversation 10 years from now, we're still going to be talking about challenges with protection of consumers and of the system.
Yeah, no, I totally agree. Preeti, I'd love for you to jump in on this same topic. Like, from your perspective, what are some of the biggest challenges around embedded payments?
Yeah, I think you know, like anything in life, you have to be honest about your motivations, you know, which I think about with our customers or prospective customers, anybody really going into embedded finance is, why do you want to do this thing? Why do you want to embed finance in your product? Is it because you want to make money on interchange? Is it because you want to reduce your payment costs? Those are not great answers. Your answer should ideally be, you want to provide some value to the end customer that will make this embedded finance product make sense for them, right? And so that I think is the biggest challenge. And kind of like Matt said, I could see us having this panel in 10 years and also talking about embedded finance plays that didn't go well because they didn't grasp that they needed to provide some value to the person or company using their product. And then the second challenge I would say is, I love that folks are getting, you know, more and more into fintech, even if they're not traditionally building products in that space, but it is a highly regulated and very complicated space. And I think that does create challenges or risks around really enthusiastic entrepreneurs wanting to build really customized financial products within another product that they've already built, and not having necessarily the expertise to execute on that well. So one of the things that we counsel our customers is, here are some standardized ways you could get up and running with cards, and we can help you with those. Or you need to be sophisticated and you can do all these complicated things. Eventually, I think technology will get good enough that you can do the complicated things, even if you don't have the pre-existing sophistication. But I don't know that the compliance and fraud pieces will necessarily also get easy over the next 10 years.
That's a great point. I think it's the dark side of the point I was making before about, we've reduced all these things to the kind of core sort of financial services components or primitives that we can combine in all these ways. So you give it to someone who's sort of inventive or creative, and they're like, well, we could do this and we could take this and we could combine it in this way. And in the back of your head, sort of coming from a financial services perspective, you're like, yes, but if you could, it's like chemistry. Like if you combine those two chemicals, you know, something bad's like going to happen. And I think that's a really interesting observation about the sort of compliance requirements that sit underneath this, right? Like we all, from a technology perspective, want to reduce this down to an API that's easy to understand and has simple documentation. But behind that API is a set of compliance and fraud and risk requirements and concerns that can't be easily expressed necessarily as an API, but are still very real. And so there is that like need for program management or a partner that can kind of guide you through that, because doing it by yourself, if you don't come from financial services, you won't know what you're doing wrong. That's a great point. Anil, I want to quickly get your perspective on this, and then we'll wrap up with one final question. But from your standpoint, what are some of the kind of key challenges that sit within embedded payments?
Yeah, I think I'll simplify it into 5 things, right? So the challenges are really what the principles are here at Akoya, right? So it's about inconsistent consumer protection, data harvesting, monetization, and that's what the challenges we believe, and that's what our network was set up to provide, is access. Consumers should have the right to access their own data whenever they want, wherever they want it, right? The consumer should provide affirmative consent and instructions to the institution to permit third parties to use their data scope. The third party should have access only to the data they need and should not have more data. Security, data access should be done in a safe, secure manner. A lot of these challenges are risks to the embedded system, and also transparency, right? So there's a lot of data harvesting, monetization going on in the buy now, pay later, where they have the data and more data, and it's threat to consumer privacy, threat to consumer security. I mean, I could go on and on. There's risks in debt accumulation, overextension by the consumer. There's a lot of risks here, a lot of challenges that need to be solved in this space.
Yeah, no, absolutely. I think we all heartily agree with that. Okay, last question. Both Matt and Preeti referenced if we were doing this panel 10 years from now. So first, I'm going to say that Nick and Ron, we just want to be invited back to actually do this panel exactly 10 years from now. So just mark it on your calendar. Like, we all want to come back. We want to talk about the same topic 10 years from now and do a retrospective. In advance of that panel, though, I want to ask each of the panelists, if you think about 2032 and you think about sort of where we'll be, how this sort of map of like embedded finance penetration and like where all the different sectors are, if you think about that changing and how it's going to be adopted, I guess I'd like to ask each of you for one sort of thing that you either hope or predict will be true in 2032. And I'll let you take it either direction you want. It can be very sort of pie in the sky, I hope we're here. It can be much more rational, like I think we'll be here by then. But like, what's one thing you're looking into the future and sort of thinking about as it relates to embedded payments? Preeti, I'll let you go first.
Okay, this I didn't have that much time to think about it, but one of the things that I often think about is we are lucky in some ways as consumers that we have consumer banking and consumer fintech products that cater to our needs pretty well. And I think we're a lot earlier on that curve for B2B products. So looking forward 10 years, I would love to see a lot of the fundamental B2B payments problems solved in a way that's really friendly to those businesses. So, I think about Mercury, maybe it'll come in like sort of an SMB neo-banking type of way. Maybe it'll come through more vendor payment automation. There's a number of ways this could happen, but we are kind of in the diverging phase. I think, Alex, what you were talking about, you can have 10 employees and 20 SaaS vendors, and you got a different payment method for everybody you want to pay. That I would love to see sort of converge into some really simple and delightful to use products.
Yeah, no, absolutely. I mean, essentially taking that 12 billion in revenue that we're making in embedded payments for B2C and trying to get the B2B number, which is 1.9 billion, a little closer. So no, I totally agree. I think that's a great example. Matt, why don't you go next?
Yeah, two trends that really following and hope play out. The conversation around instant payments, those who have been around RTP and FedNow, that it seems like we've been talking about them for 10 years already. So hopefully 10 years from now, hope that
FedNow might actually be like live by then. Like, don't cross your fingers, but that's possible.
And adopted even better. So I think whether it's them or some other version, I think instant payments are the norm. That's something that I hope to see. And then the other piece, I hope to see a steady mix of sort of small, mid-sized community and regional banks that are really a stable foundation for supporting the growth of the industry. I think the number of bank partners is still a constraint for the system overall. So I think that's another hope for 10 years from now, that there's ample capacity of reliable and steady banks that are supporting the industry.
We could do another whole hour on banking as a service and partner banks in that whole world. We won't, but I think that's a great observation and something that I think probably will happen. Anil, why don't you round us out?
Sure. Yeah. So I think the future, I mean, obviously the obvious ones are, embedded lending, embedded investment, embedded insurance, embedded banking. I think I want to go back to one thing that we talked about early on in this conversation is the embedded fintechs, right? So I think that's where we will see where right now you see fintechs and they address a small space in the embedded banking, investments, lending. But what you will probably see, my guess is where the base platform company didn't start off as a fintech company, right? But now you are embedding the fintech pieces in your offering within the platform, but you didn't start as a fintech. So I think that's where we are probably going is the fintechs would be embedded in the base platform as opposed to what we see today the other way around.
Ooh, interesting. I like that one. That's a good one. Awesome. That's perfect. I know we just have a couple minutes left. So if there anyone who had a question they were hanging on to, feel free to drop it into the chat. Nick, did we have any questions in there that we sort of skipped over or didn't get to during the conversation?
Previously, we had someone, I think it was Rafi was raising her hand. Rafi, would you like to come off of mute and ask your question? I guess not. So if we're gonna go down a little bit more, I made a comment earlier about.
Okay, can you
Oh,
hear me
there's
there?
Rafi.
We can.
Yes, I was just checking if there are any opportunities for embedded payment in third world countries. Lots of the large population don't have any access to banking services, nor can they afford it. And I was just thinking if there's some kind of payment solution that they can utilize to do some very basic commerce level things.
Yeah, that's a great question. Who on the panel would like to jump in on that one?
I can take a crack at it. And I think it's the other way around. I think the third world countries are ahead where the United States is in terms of embedding. I was visiting India over the summer, and you can text in your payment, right? That's embedded payments, right? It's you can't do it up here. Or my bank in India, you can use WhatsApp to make a transaction, to check balances, to move money. So all of that stuff is actually going on in third world countries, which I think the US will eventually catch up.
Yeah, I was thinking more of Africa. I know India is pretty advanced in a lot of things there, but I was thinking more of Africa there. So.
Well, and Africa is an interesting example also in that, to your point about like banking infrastructure, I think one thing that I've observed about the US versus other countries is sometimes the more infrastructure you have, the more it gets in the way of progress, right? Because it's like we still have a lot of like activity that flows, I mean, through checks and through banks and through these systems that work, but don't work that well, but there's not quite enough of an incentive to optimize. Whereas, like Africa, I think is a good example of one that the rate of like smartphone penetration is actually very high in Africa, but the sort of legacy infrastructure sitting underneath it hasn't been as built out. And so a prediction I would have just at a very high level is that we will see, even in kind of third world countries, embedded payments and embedded finance take off a lot faster than they do in some of the more developed countries, just because there's less getting in the way. That would be my sort of guess. Anyone else on the panel have a thought on that?
No, I think most of our work is domestic. I think the piece you hit on Africa, we do have some clients that support and had one that was a cross-border payment. They sent payments into Southeast Asia and West Africa. So a little bit of experience. I think the other is, you mentioned the cell phone sort of adoption rates, and then the use of digital wallets more so than their bank accounts. So I think that creates the opportunity. Now, granted, both of those are dependent upon having the cell phone and having the wallet. But I think in those cases, the trend that you drew, when you don't have so much legacy infrastructure, in some cases that can create opportunities. But there are some base assumptions around other enablers that have to be there.
Yeah, no, that makes sense. Thanks for that question, Rafi. That was great. Last one we'll end on, and then I promise we'll end and we'll go into the networking, is one from Aubrey. I think this is a fun one. So just answer quickly. Don't like think about it. Don't overanalyze it. Who wins in embedded payments? And I want each of you to answer that. So Preeti, you go first.
My gut reaction is whoever can control digital wallet and point of sale.
Awesome. Perfect. Anil, you go second.
The customer wins in embedded payments.
Nice. Yep. Nick said that one too. All right. And then Matt, you get the last word.
He stole my answer. I said, hopefully it's the customer.
Hopefully it's the customer. Okay. Well, we'll hope for the best by 2032. Nick, I think I'll hand it back to you and we can go into the breakouts.
Awesome job. Thank you, Alex, for an engaging hosting experience. Thank you to each of the panelists for your perspectives, for your engagement, for your thoughts. You could tell that you guys weren't reading from some internal monologue. It was definitely something that you felt from the heart. It came across. We loved it. So at this point in time, Ron, I'll turn it over to you, and we'd love for everyone to stick around and have interesting conversations based on embedded payments, based on your experience with embedded payments, based on what you've just heard in this panel. So if you're interested for the next 30 minutes, we'll do that type of a networking exercise, and I'll let Ron handle the mechanics.
Sure. Thank you very much. The way this networking works, we're going to turn it over to Bill, who's going to randomly assign people to groups. There'll be 2 15-minute sessions, so you get to meet a couple of different people. And if you're not interested in the group you're in and you want to go out, just get out of the group and you get put into another one. So Bill, can we turn to you?
Okay, stand by.